Hello and welcome to Bootcamp 2.0. This is the first of several sessions where we're going to introduce to you the Trading Everyday framework and approach that allows you to learn the cornerstone of how to be successful as a trader. We're going to provide you with the tools and tactics of learning to use the market cycle framework, price action framework, as well as candlesticks analysis and chart formations framework. So over the upcoming several slides, you're going to start to get an understanding of how to start utilizing these tools in your trading every day. Now, to begin, we're going to start with a disclaimer, and that's really broken up into two unique components. There's the service disclaimer and there's the educational disclaimer. And as you can imagine, in regards to the service disclaimer, everything contained in our website, as well as in regards to any affiliates that provide tools, tactics on behalf of trading every day, is not a substitute for any professional advice that you would receive from your personal stockbroker, financial advisor, or personal banker. All decisions relevant to your trading activity are yours and yours alone. By no means is Trading Every Day held responsible or accountable for any trading actions, losses, or costs that you may incur. As well as in regards to the third aspect, indemnification, all individuals that participate in each and every aspect of any seminars clearly is participating at their own discretion in regards to trading material and clearly is using that on their own behalf. The educational disclaimer is very similar to the services disclaimer. All information materials and information relevant to training and coaching provided on behalf of Trading Every Day is clearly for educational purposes only. We take that a substantial step forward and we provide you clear, real live examples of the market conditions so that you can use and apply those conditions accordingly. We also take that into consideration in terms of helping you develop your trading skills. So, as we go forward throughout the next couple slides, we want to go into more depth and more detail around the entire aspect of learning to trade using the Trading Everyday approach. Now, when we start out, we want to start with understanding that trade execution is really about learning to facilitate making decisions in regards to each and every trade. So, we want to take each decision point relevant to trade execution and expand on those briefly. There are four unique aspects that every trader goes through in the context of an entry, a stop, a target, and some form or approach relevant to money management to be able to facilitate managing the trade until the target or the stop is hit accordingly. Now, as we go through this process, you want to learn to execute your trades according to a very consistent, standardized framework. And this is typically where traders start, but not necessarily where traders end in relationship to becoming a master of trading or mastering their skill sets. Keep in mind the following. The best approach for you to become a master of trading is not necessarily to initially focus on trade execution. It's very vital and very important in your trade execution, but it's probably not necessarily the best approach to help you understand all the facets of how to be successful in trading. So we want to go into a little bit more understanding of the decision points underneath these four cornerstones of trade execution. Every entry is either going to be categorized as a long or a short, and in the context of trading, typically there is a risk dimension. Either you're using a capital at risk approach or a reward to risk approach or some form of allocation in regards to how much risk you're willing to take per trade or in relationship to your total capital available for your trading in regards to your trading style. What we want to clearly understand, you want to have this framework apply to each and every trade, but it's also important to understand that a high percentage of traders typically fail because of poor money management. This is the critical area where you find yourself taking a lot of trades, having some series of losing trades, but not enough winning trades to offset those losing trades. And so there are a couple additional characteristics that we need to delve into to help you learn how to improve dramatically your money management activity so that you can create an imbalance so that you have more winning trades versus more losing trades, or you have more winning profits that offset all of your losing profits in relation, or your losses relevant to your trading. Now, also as it relates to your trade execution and decisions, there is a critical element referred to as position size. There's two types of position size models that we want to start with, and that is learning to scale into your trades, allowing you to develop and build a framework where you're adding to winning trades and you're building good habits as it relates to adding more profitable opportunities to generating more intraday, daily, or weekly profits according to your trading plan. But there's also a framework as it relates to an all-in at once approach, where you're taking immediately a complete position and you're focusing on a high odds, high quality setup with the expectation that that will go in your favor. Clearly, once you're in the trade, from either one of those two approaches, whether it's scaling in or an all-in at once approach, you have to focus on how you're going to manage the trade from a completion standpoint. And this is what leads to the aspect of scaling out or an exit all at once approach relevant to your trading. Now, in conjunction with the cornerstone of an entry, targets, stops, and money management from a trade execution perspective, a very vital, important aspect is learning to take a break-even approach initially so that you can manage your trades and eliminate the initial risk. So you want to learn to have some form of a trailing stop approach to help you with your money management. Now, as we go into further detail, clearly each and every trader is clearly focusing on a trade execution framework where if you're going long, there is an underlying premise that you're in an uptrend. The uptrend has higher highs, higher lows, and as we're going to define in the upcoming material, higher openings, higher opening ranges over the course of some period of time, and you're looking for a very specific entry based on a signal. That signal is going to allow you to define some risk where you place your stop accordingly underneath your entry in terms of trade execution, and then you have a preliminary target that you're going to be pursuing in terms of watching your trade, whether or not it facilitates hitting that target or not. So that's really always defined in terms of a long entry. Very similar, we have a short entry in the context of price action being defined in regards to potentially a downtrend where your anticipation is focused on lower highs and lower lows, and then clearly you're placing a stop above the entry signal that you're looking at, and then that's going to define the associated risk with the trade. As a result of that, you can clearly define the reward by defining a preliminary target. So you clearly have the basic foundation every trade has to go through in some form or fashion, either a long entry or a short entry. And both of these provide us with a paradigm for being able to know how we're going to evaluate trending markets as well as non-trending markets. We often use a reward to risk framework to be able to help facilitate being able to improve the quality of our overall trading performance. And we're going to talk about that in some of the upcoming sections within the bootcamp program. But initially we want to start with the paradigm of clearly long entries, short entries, as well as in terms of the cornerstone of trading. There are four main characteristics that you want to focus on. Clearly, that being the entry, the target, the stop, and your money management tactics that you're going to focus on to facilitate staying in the trade as long as you can. So you really want to learn to be able to establish all the tools and tactics to help you improve your trading using trade execution. Now, the important aspect of Trading Every Day's introduction to Bootcamp 2.0 is that we focus on the entire gamut as it relates to improving your trading. So trade execution, as we talked about in the very beginning, you clearly have some very simple components there. You have a signal, you have an entry, a stop, a target, and some form of a trailing stop or money management tactics to allow you to manage the trade. In conjunction with that, we want to learn to develop a framework around testing high odds trades using a probing approach where we allow ourselves to see whether or not the trades will move and work in our favor, and then we start to learn to add to those winning trades. So we're going to build on that scaling in approach that we introduced at the very beginning in regards to the trade execution decisions. The next component, clearly, which is one of the most vital in terms of every aspect of Trading Every Day's approach, is having a solid foundation in risk and money management discipline. And this clearly means learning to master the basics. In conjunction with trade execution, and then clearly having a foundation that you can rely on in the best of times in trading and in the worst of times in trading, is clearly having the right trading psychology and mindset. This means that you want to have a realistic mindset as it relates to your trading approach, trading tactics, tools, techniques that will help facilitate you reaching incremental milestones and goals so that you can continue to build on them so that you're continuing to improve as a real-time active or part-time swing trader, intraday trader, or day trader in regards to your trading style. Clearly, your psychology and mindset is what's going to help you identify what trading opportunities that are favorable for you to trade versus what trading opportunities are not favorable that you should be avoiding, and also understanding why you want to avoid these trading aspects or opportunities in the early stages of your trading, as you progress in your trading career, and as you become a seasoned trader and start focusing on consistency as well as incremental increases in your profits. We also want to focus on the little details that you should clearly know and understand that dramatically improve your profitability on a constant basis. And then no trading program or framework is going to allow you to be successful without having some kind of systematic approach or a trading plan approach that allows you to recognize the market conditions and the market framework. And that means learning to understand the pre-market conditions. When the market actually opens, there's the morning session where we're evaluating the confirmation of the gap up, gap down, or the market's opening flat, and then allowing ourselves to wait in some cases for the storm to pass so that we can start to identify the high odds trading conditions. And then last but not least, learning to trade in more difficult, unfavorable conditions, which are often sometimes referred to as the doldrums, the midday session, but also the late day session, and also having clearly defined rules and conditions that we can use to focus on trading, even in the context of after hours. A lot of traders ignore the level of experience that they have in regards to risk and money management and focus primarily on profits. So we really want to make sure that you learn to master the basics, have an outstanding understanding of what components are required for your trading success. So with that being said, hopefully this is a good starting point for you in terms of the introduction to Bootcamp 2.0. We look forward to sharing with you a lot of different aspects of the details underneath each of these areas, as well as probably more than 20 to 25 more topics with fine detail in regards to Bootcamp 2.0. So look forward to the next coming sessions, and take care. Get more free videos and examples at www.tradingeveryday.info.